Welcome to the Greatland Gold May Town Hall meeting with MD Shaun, hosted by Copia Digital and Ticker TV. This is where we collect your questions and get Shaun to answer them. So, what's happened since we met here last September? Quite a lot as it happens. The business is totally different. And Shaun, you've had quite the journey getting here, and the schedule has had to be completely rearranged. So here we are online doing this town hall. So we'll apologise to everybody for that. Now, I think the best thing to do is to crack on and get straight into the presentation. Now, I noticed that sometimes people don't look at the presentation, but in this instance, I would very much urge them to stick with this. This is a very different business, and this is a very different iteration of the business. So over to you, Shaun. Tell us about your journey and then into your slide pack.
Thanks, Donald. I appreciate taking the time to catch up, and as you said, for the reschedule this morning. I'll try to do the presentation in 10-15 minutes because although brief, it will allow more time for questions. But really, this is an important kind of milestone for us in that we are now a producing business. What with the acquisition of the 70% of Havieron we didn't own, together with 100% of Telfer, we now own both 100% of Telfer and Havieron. These mines are next door to each other in the northwest of Western Australia. And now we have this confluence of immediate production and infrastructure at Telfer, coupled with one of the best development assets in the gold sector. And then ultimately, in around financial year 2028, we should actually see the benefit of running both Telfer and Havieron together. We completed the acquisition. We announced that acquisition in September 2024 and completed on the 4th of December 2024. And we had a really ambitious program for this first 6 months of ownership. And I'm really pleased to describe how well that's gone, both in terms of the operational outcomes we achieved in the December month and then in the March quarter, but also in terms of putting in place the debt facility, albeit undrawn, and updating in just 15 weeks the resource, 4 weeks after that the reserve, extending mine life at Telfer out another 2 years, and being able to describe a bigger and better Havieron. And that will culminate with us undertaking an ASX listing in June, towards the end of June 24th, 2025. And then in the second half of the year, we'll finish with that Havieron feasibility study. This is just where we sit today as an organisation and our market capitalisation. We've seen really strong growth. If you look at what we acquired the asset for compared to what we now trade at, that value creation is really evident in that share price and market cap. The team we put in place, it's a number of people who have done this before. Myself out of Northern Star, we bought 6 assets off majors. All of them we were able to focus on productivity, focus on the opportunity to invest in the drill bit and extend mine life and create shareholder value. Integrations are hard, but we've got the team that has done this before, and I think, augmented by an additional select group that we think are great around the resources, around the reserves, and also around delivering the Havieron project. The ASX listing itself, as I mentioned, we want to list on the ASX on the 24th of June 2025. And this is effectively Greatland, which will continue to trade as GGP ticker on both the ASX and the London Stock Exchange. So there'll be just one company that trades on both Australia and in London, and we'll all be shareholders in that same company. Where we see the advantage of this is Australia is a very strong resources exchange. I think if you look at that table in the top right-hand corner, you can see Australia is the second largest pool of capital for listed equities. And then down on that bottom left, I think importantly, we also should be significantly indexed in Australia. We don't have any indexation currently on the AIM market, but we will be comfortably in the ASX 300, in the ASX 200, and potentially with the VanEck ETFs, we should be re-rated as well. So we think that that's really advantageous for shareholders who have come across and are existing holders in Greatland. And this table just briefly shows where we sit within that gold peer space. There is a large number of peers in Australia, which we think is advantageous. That peer group creates a critical mass for investors on the ASX market. And as I've mentioned before, we feel this augments what we have and enjoy here in London, but we augment that with additional demand out of Australia. Moving to Telfer, I mentioned the good results we delivered in our ownership to date. March was a fantastic quarter for us. We delivered over 90,000 ounces of gold plus 3,500 tonnes of copper. And we did that at an all-in sustaining cost of Australian dollars 2,126, and presently the gold price is over $5,000 Australian. What did that do? That delivered $253 million of free cash flow. Again, everything I say will be in Aussie dollars unless I mention otherwise, but that means at the end of March we had $398 million in the bank, debt-free. And what that should do is give people confidence that we have the ability to continue to invest in the company, in delivering performance and life extension at Telfer, and ultimately delivering Havieron. And these charts just show some of what we were able to achieve in the December quarter. Clearly in that top chart, we're able to fully participate in that high gold price. It's continued to go high, but I think that was the highest average gold price received by any of our peer group companies. And we're able to do that while just notching down costs. You can see these costs for the comparative data go back to 22, 23. Ordinarily, you'd expect those costs to walk up with inflation. We've been able to achieve a modest cost out, which I think we're really proud of. And then when we go into the specifics, something like the mill, we're able to get much better performance out of the mill. The average recovery for gold was around 81%. We've taken that up to 86.7%. Similar for copper, around 70%. We achieved 80% in the last quarter. We think we can maintain those gains, albeit, just to be clear, we did guide down to about 82% gold recovery because we've got some oxide ore coming from right up the top of that West Dome Stage 7 extension. That's an oxide ore, typically associated with lower recoveries through that mill. But we think we can hang on to that relative outperformance of the mill. And the team, led by Simon Tyrrell, COO, has just done a great job with that. It's a big mill, 20 million tonnes, 2 10 million tonne trains. This is a big asset, even in the context of Australia. You see Boddington and Cadia to the left of screen. They're both still owned by Newmont. And even something like the Super Pit KCGM is significantly smaller than Telfer. It just shows the size of the prize here with the asset base we have. Importantly, we also have these stockpiles at surface. Over 400,000 ounces of gold at surface. That's $2 billion. In the same volume, we have about just under 15,000 tonnes of copper. What we plan to do is really target using that high grade, that 9.2 million tonnes of high grade ore. But we think that low grade stockpile we largely preserve over the next 2 years. We think we walk that down from about 20.7 million tonnes down to about 19 million tonnes. We love having the flexibility, not only the financial benefit of the stockpiles, but the flexibility it gives our operation. So although there's a balance here between wanting to use them and translate that stockpile into cash, we also do want to maintain some level of operational flexibility that it affords us. I mentioned the resource before. This is where that additional resource came in. This was done in 15 weeks, which is a remarkable outcome led by Michael Thompson, it's a great job, and where we've added ounces is where our center of gravity for mining is, particularly in that West Dome open pit, and then those higher grade zonations in the main dome underground. We added 155 million tons of material. That translated to 3.2 million ounces and around 117,000 tons of copper. So in just 15 weeks, we thought that was extraordinary. And what that gave us the confidence to do is come out and increase that outlook of mine life and production at Telfer. People may recall we originally inherited a 15-month mine plan from Newmont. We would have used, including under Newmont ownership, around 7-8 months of that. So that we would have depleted that to around 7-8 months. What we're able to do is then increase that by a further 2 years out through June 26, then June 27. And the reason we haven't tried to describe FY28, June 28 year, is because we expect to have Havieron on at that time. Havieron will have a profound impact, big volumes, high grade, lower cost. So once we have that feasibility study out on Havieron, we can be more definitive around what that looks like in due course. This is the center of gravity for our mining presently in that West Dome open pit. That stage 7 cutback up the top, that's where I mentioned the oxide ore. You can see that area right up the top there in the red. You can also, harder to see, but the red zonation down at the bottom of the pit, the stage 2 extension, that's the focus for our mining over the next 2 years and the reserve. And what we were able to do was delineate. Otto and his team delivered 46 million tonnes of additional material into reserve, and that was the foundation piece of us having the confidence to do that outlook. But you can see a lot of this areas in that West Dome pit where mineralization has been identified but not yet put mine plans around that. We feel really confident about what we can do to extend the life in this West Dome. This is just the underground. The underground's something that we've really focused on, trying to increase productivity. There's a lot to be done in the underground. Sean McLaughlin and the team have done a great job. If you just look previously, there was around, say, 200 meters development meters. That was the productivity getting out of those main jumbos previously. In the last quarter, we saw that over 450 meters of jumbo productivity, 470 meters in the month of March. That's an extraordinary turnaround, and again sets us up for the future where we develop more areas, we create more mine plan in front of us, and we bring flexibility into that mine plan. And then overall, look, I think for me, what we achieved in 15 weeks on that resource was extraordinary, but there's lots of work still there to be done on the resource. You see these extension opportunities shaded in the blue, a lot in that West Dome. There's a cutback sitting there already drilled in the main dome. We actually think that whole north wall is mineralized, so I think at some point we'll hopefully put a rig on that and understand if there's a bigger cutback opportunity, but we're not in the main dome. That is contingency. Our focus is on the West Dome. And then in the underground, in addition to that big increase in the resource, where we brought that up to about 8 million tonnes, you see these big stockwork areas, the vertical stockwork down the bottom. But I think excitingly, the eastern stockworks, I suspect that might be the next mining area we drive into. That's very promising, just more of the same in terms of grade, but that has the potential to be quite a large area for us, that eastern stockwork, so it's a focus for us. And I should mention the West Dome underground. To put this in context, there's been 20 years of underground mining under that main dome. This is similar geological units under the West Dome. This is our first drive across to the West Dome. We released, I think in March, 19 intercepts into that West Dome underground, some of the highest grades we've seen at Telfer since 2005, 750 metre strike length, large mining widths, around 24 metres. A bit wet. We do want to understand the hydrology in this area, plus the geotech in our next drilling campaign. But although this is still, I think, can be described as blue sky rather than certain, we have had the conviction to put a second drive across to this West Dome underground during this March quarter ahead. That will be about a $20 million investment, but again, allows us to potentially accelerate its development if it continues to deliver what we've seen early on, and we solve the hydrology and other elements there, the technical challenges of going into a new area. It's also a lovely little horizontal uh, hole back to the existing underground crusher and shaft. That's a really efficient mechanism to bring ore to the surface, and then that flows directly into the processing plant. So we're beautifully placed there, albeit it's early days in understanding the West Dome underground. And look, we'll continue to invest regionally. We have our regional exploration team who will have an expanded role. And excitingly for that team, also, they'll be looking at some of the opportunities on the existing mining leases. The Southeast Hub in particular, I think, is an opportunity where close to the mill, good little open pits there, and the potential to increase their size. So we'll be multifaceted in how we approach that regional exploration around the Telfer Havieron area. That just brings me to Havieron itself. Again, it's just a tremendous size asset at really good relative grade, and then the ore body itself is extraordinary. Subvertical, which is beneficial. Gravity is your friend in underground mining, but I think ounces per vertical meter is one of the best rules of thumb. Anything approaching 4,000 ounces per vertical meter, I think, is extraordinarily good. This is close to 8,000 ounces per vertical meter with the opportunity to continue to add ounces. So it's an extraordinary ore body. It's also compact. All of that ore is sitting within about a 650 meter strike length. And you can just see that first 21 or 20 years in that red zonation in the southeast crescent. That area is the existing mining focus, but you can see how blocky it is, how it holds together. Big stopes, 125,000 ton stopes. That's around tenfold bigger than the average stope size in Australia, which drives your low costs. We then haul this all back to the existing and known Telfer infrastructure, so it augments what we already have. And importantly, we took it from a 2.8 million tonne to 3 million tonne pre-feasibility study. We've now taken this and believe we can do 4 million tonnes, even a little bit more than 4 million tonnes a year out of this Havieron underground. And we think that makes the combined Telfer Havieron even better. In terms of our go forward plan, as I just wrap up, look, the ASX cross listing is really important for us next month. And a lot of what we set out to achieve, I feel we have done so, notwithstanding the ambitious program that we set for ourselves. In the March quarter, we came out with the updated resource. We've now added to that reserve. We've also been able to demonstrate a 2-year life extension at Telfer and give some guidance in terms of a bigger and better Havieron asset. So a busy time, but happily so. And what we've been able to do, all of that without debt, although we still enjoy the support of ANZ, ING, HSBC. We're unhedged. We fully participate in the high gold price, but we do have some insurance there with some gold put options. If the price did go down, say by the end of 2026, we've still locked in $4,200 gold price, which in any other market would look tremendous, but it's nice to have insurance. And also we have that $750 million support for Havieron from ANZ, ING, HSBC. Again, that's subject to the feasibility study, but we feel coupled with the $400 million in the bank, we are very well placed that when we deliver that feasibility study to move swiftly to being fully funded for the asset. So with that, I'll really just wrap up now by saying we feel the company is well positioned for growth to deliver existing ounces and cash flow, but also what we think is one of the best growth assets in Australia at Havieron. So with that, I'll stop sharing the presentation and we'll get back to Donald and questions and answers.
Great. Thank you so much for that, Shaun. Let my first question be, how have you and the team actually managed to improve those production margins to such an amazing extent? I mean, people can go back and have a look at the detail, but oh my goodness, it's a different business. How have you done that?
Yeah, look, thanks, Donald. It's been a lot of hard work by the team. Yeah, I really break that down to, I showed you the chart about the improved recoveries we've got at the plant. I think that's been a great success. The improved productivity we've achieved in that underground. And similarly, I think the open pit, that was already performing well. We've just been able to notch that around a little bit, and the life extensions there, all coupled with we've tripled the number of drill rigs at site. So it's multifactorial, but they all add up as part of our desire to achieve continuous improvement.
And have the folks you've been working with, the Telfer team, have they been amazed at the scale of your ambition? You've come in and really changed things around extraordinarily.
Yeah, look, Donald, integrations are hard.
Mm.
So, look, I think there is a lot of change for people at site, and that's something we try to be mindful of. But equally, we also wanted people. I think people are receptive to change in the early parts. If you leave it too long, I think everyone just settles back down. I think people were expecting change. They've certainly seen that. Hopefully we've got the balance right there. But look, we really appreciate the people that we brought across from Newcrest Newmont. They're good people. We've augmented the leadership team a little bit there just to focus on what we think we can do better. But equally, one of the strengths we have is we're building on such a great foundation, not just of infrastructure, but also of all the great people we inherited from a major in Newcrest and Newmont at Telfer Havieron.
Okay, let me give you some Havieron production questions from the audience now. Barry Calvert asks, that's Barry Calvert, will there be a second decline at Havieron to improve production rates? And if so, what extraction capacity will it have? Well, you were talking in your presentation about 4 million, 4 million tons of resource. Is that the right one? Did I get the right number?
Yeah. So effectively, we've made it about 50% bigger. So where previously we had studied at 2.8 million tonnes, Middle Newcrest, we're at about 3 million tonnes. We've now think that can be 50% bigger at 4 million tonnes, maybe even a little bit higher at up to 4.5. But that incremental growth, I think, will be extraordinarily financially attractive.
Nick Greenwood asks for an update on the water problem at Havieron. I've heard you answer this several times, and the answer has always been there is no water problem at Havieron. Who's right, you or Nick Greenwood?
Yeah, it's a good question, Nick, and I think it reflects a question we regularly get asked. Look, there are 3 confined aquifers there. We've been through the upper confined aquifer, the middle confined aquifer, and coming up to the lower confined aquifer when we restart. Look, I don't think the aquifers are technically challenging for us. That it's a well-trodden path in Australian underground mining where you drill in, you depressurize, you then put in water bores, dewaterize, move through the aquifer, which is just porous rock where some water can flow, and you establish the pumping to maintain that. Overall, Havieron is a very dry mine, or a relatively dry mine. Peaks at about 36 litres a second, quickly goes down within 12 months to about 25 litres a second. This is very manageable. It's a much drier mine than, say, Telfer, so we don't think that's a challenge.
Nick Taylor asks, you regularly say you want to follow the Havieron ore body down to the centre of the earth, but how deep can it really go, and what's economically viable to mine? So that's a pretty broad question, but an interesting one nevertheless.
Yeah, no, it's a great question. Look, we've already got 1,000 meters of vertical extent on that, where we have a resource, and in the slide I showed earlier, that's centered on that first 1,000 meters. We have holes, I think about another 200, 300 meters further below that, where we continue to intersect the ore body. So although there's only a few data points, there's no structural reason why this is cut off. I think at some point economics and do come into it, and just remember the first 1,000 meters just on the southeast crescent gives us 20 years of mine life, at least at the 2.8 million tonne scenario. So we are spoilt for mine life here. Having said that, one of the things we think we'll do in the study is put in a bulk handling system. Think of this as a dedicated decline with a conveyor in it. Conveyors are great, good ESG, but better economics. Those efficient material handling systems actually make the ore bodies more economic at depth, because truck haulage, you typically just walk up your haulage cost and the operating cost with every extra vertical meter of haulage. Once you have a conveyor installed, it remains incredibly functional and efficient. So we think this is, with a 20-year life, with such a big ore body, with an ore body that continues to go down, these kind of factors all weighed in us choosing to put in a bulk handling system.
That bulk handling system is automated. So it's the introduction of automation. What difference does automation make?
Yeah, again, it goes to cost. We think not only we think the conveyor will walk down costs, which we're excited by. And then even at the surface, currently we think about it being man-driven trucks hauling back from Havieron to Telfer. I think there's huge opportunity to look at autonomous haulage during that time. That could halve the haulage costs for Telfer Havieron haulage. So there are these efficiency productivity you can get, and bring in more high tech, I think, and making the mine of the future, which is more efficient and upgrades the involvement, I think is really attractive for us.
Okay, let's switch our production to Telfer, if we may. Telfer, would you say that Telfer is actually the main thrust of production at the moment, with Havieron put back for a year or two? Is that a fair assessment?
Yeah, look, Telfer's certainly the present focus. It's hard to get away from the draw of producing over 300,000 ounces a year from Telfer, and the cash flows are associated with that, and that is immediate production. We think Telfer looks a heck of a lot better when you bring Havieron in say FY28. There's been no change by Greatland of that timetable, but we'll really nail our colours to the mast with the feasibility study that we bring out in the second half of the year. I think once we have
feasibility study, when can we expect that, Shaun? Second half of the year? Can you be more specific?
The second half of the year, look, I think my sense is that we might be kind of in that December quarter. That's more of a sense for it than, but nor do we want it to be Christmas Eve. So love it to be kind of November, maybe even as early as October. But that's probably how I feel about that. It's one of those studies where the more time you spend on it, the more accurate you can be. That is advantageous.
Okay, Paddy Gall asks, could you explain for us your plans over the coming 6 to 12 months for the West Dome underground system, and expand a little on the geological system there and the potential for a similar system at Main Dome? You've covered off the main thrust. Just give me your gut feel about Telfer and those different, the West Dome and the Main Dome.
Yeah, look, the West Dome is exciting. There's no doubt about it. Just the grade that we're seeing there, and the mining widths as well. You can put big kind of polygon shapes around that to move out material. So look, we are voting a little bit by putting in that second decline. That's an early investment by us, partly driven by the fact that we do have this financial strength. So we're excited about that. It's a cautious optimism. It's a measured optimism, because I think for me, I feel pretty confident about the geotech. It's really understanding that hydrology and the cost of dealing with that water. There are scenarios where that's a minor issue. There's scenarios where it takes a lot more investment. So once we have the data points on that hydrology, I think I'll be able to talk with more definitively. But certainly the size of the prize looks like it's worth chasing out there to the West Dome. The first at bat under that West Dome couldn't be better.
It's probably worth reiterating that your world has completely changed. In the town hall last night, you said that a year ago you couldn't afford pot plants in the office, and here you have £200 million or 398 million Aussie in the bank with no debt. It's a complete turnaround, but that gives you the firepower to do so much development work, I presume.
Yeah, look, you're right, and it is transformational. The pot plant, I did give the pot plant story last night, but at the town hall where literally we couldn't afford pot plants because we had unfunded joint venture commitments that we had to scrap and make sure that we could pay. I think one year we couldn't afford to pay the bonuses in June, and people had to kind of I just told people, if you stay with Greatland, we will make you whole, and ultimately we did. So it was a really challenging environment. I think happily so, though. The wagons were circled a bit, and it was a great team environment. But look, certainly it's pretty extraordinary now, having the best part of £200 million in the bank, albeit it's a much bigger scale business. It's truly transformed, and with that comes a huge amount of focus and work, but equally it's hugely rewarding for us to see what we've been able to deliver at Greatland, to deliver that vision of owning all of Telfer and all of Havieron.
And the benefits of the high gold price, number one. And number two, how long do you expect the good times to remain? Is this platform of $3,000 as it seems, and a structural readjustment which is here to stay, or how do you see it?
Yeah, look, we feel really positive about the gold price. It's I'm not good at telling the future, but I think the global geopolitical risk just seems to be supportive of gold, and even when you've seen it try to pull back, I think again it's had a strong week. Although it obviously it's a market, it can move overnight, but it's certainly strong, and that's what we love about the put options, just having that insurance there. That insurance is, it's like home insurance. You're not secretly hoping your house will burn down or your home will burn down, but it's nice to know it's there. And at 2,126 all-in sustaining cost, having the worst case scenario of circa 4,200 in calendar year 26, for 0.5% of revenue, we were able to protect almost 100% margin. So we felt that was right way risk, and buying them so far out of the money made them quite cheap to invest in.
Okay, good question from David Love here. He says, given that you've got so much going on at Havieron and Telfer, as discussed, are you considering regional opportunities to fill the Telfer mill from smaller explorers? And let me roll in another question someone else has asked. I mean, what about takeovers? Inorganic growth, as people call them.
Yeah.
Are they worthwhile, given that you've got so much to focus on?
Yeah, look, I think in terms of inorganic growth, it's something we'll think about. We're effectively built now on that inorganic growth by buying Telfer and the 70% of Havieron we didn't own. Equally, we just love our organic growth profile, just delivering what we think Telfer can do, delivering the mine life extension, successfully delivering Havieron. We think gives us a pathway to creating value for shareholders. I'm not sure we want to dilute people's exposure to that growth. Never say never, but I think it would be very financially disciplined. I think, that's what I like to think I bring to Greatland, which is, the confidence to do M&A, but to do it when it creates value for shareholders, not growth for growth's sake. I think that dovetails into the broader question around, M&A that leverages our monopoly position as the holder of infrastructure in the Paterson, I think is potentially more attractive because there's an industrial logic to that. Having said that, with the life extensions we've been able to achieve at Telfer, then Havieron coming on, I just don't think there's a platform where we need to do anything quickly. We can take all the time in the world, but certainly permitted ore bodies in that area would be attractive to us. There's a scarcity of that, but I don't think anything will beat Havieron into that Telfer mill. And, that's our focus right now. And that Southeast hub I mentioned briefly in terms of the regional exploration team, these are identified open pit material on the mining lease, so already effectively permitted. They could come through that mill pretty quickly. I think that's something that you might see us look to prove up, just to give us another contingent mining area. And remember that main dome, we have a pushback there that we can do, which again is contingency. So we have a lot of flexibility in our mine plan right now and the opportunity to drive mine life.
Okay, let's take us to the ASX cross-listing, which I'm sure is pretty close to your heart. And share related questions. Let's crack through some of those. If you could give us the latest update on the ASX cross-listing, please, Shaun.
Yeah, look, well, most importantly, we have the scheme of arrangement meeting this Monday, the 12th. That's when our UK shareholders approve that we will do the ASX listing. That's an important step. And we think what the ASX listing does is a single company we'd like to have the prospectus out by the end of May, ahead of the 24th June ASX listing. We continue to respect and value what we've got here in London, but we think we augment that really materially in terms of Australian demand. And we think that adding new demand for our stock is hugely beneficial. Plus, indexation, it's good to be aware of indexation. We think there's a really large amount of passive buying that will have to buy us if we go onto the ASX, which again just augments the demand for our stock here in London. So whether you're a shareholder in London or Australia, you'll hold securities in the same shares in the same company. And we think it will be to everyone's advantage.
Okay, and once you've actually done that cross-listing, Alan Bauer, Malcolm Hopkins, and Adil all ask the same question, more or less. Once you've transitioned from, once you've done that cross-listing, will you transition from AIM to the main market in London? I
Yeah,
know you're a fan of London.
Yeah, look, massive fan of the London market. So look, we'll be here. I think our starting point is just to stay on the AIM. Look, one of my directors does say there's tax advantages to staying on the AIM, which we're mindful of. Having said that, in time we'll take advice, and it could be that liquidity stays centered up here. If so, like right now, I think we're trading some 25 million a day, so call that 12 million pounds. I think we're one of the more liquid AIM stocks, or probably the most liquid without knowing that definitively. If that was to continue, perhaps the LSE main board makes some sense for us, but that's I don't want to scare the corporate team at Greatland and say we're doing another corporate change. I think what we'll do is focus on what's ahead of us, get that cross listing in place. We're on the ASX and on London, and then we can sit back, observe what happens, and take some advice as to what's the optimum thing to do with our London listing over time. But right now it works really well. We're really pleased with it. So I'd be it doesn't jump out of me that we have to make a change there.
Andrew Jones asks a useful related question. He asks, have any current fund managers clearly stated their intention to purchase shares once GGP has cross-listed on the ASX?
Yeah, look, we're not building a book or anything at this, so no, nothing definitive. But we actually went through Sydney, Melbourne, the two major Australian cities, literally last week. So this roadshow is really the second leg of that, coming into London and ahead of the scheme meeting. And certainly, look, I think the broker's job is to try to run a shadow book, so to speak, and understand. And look, I think the brokers feel really positive about how would be received if we came to the ASX. I think we make a splash when we're there, where we made more free cash flow in the March quarter than any of our peer companies, including some much larger vehicles. So I think we've got the market attention, and it's our job to continue to operationally perform, but also set up a platform there where they can come and buy stock, because a lot of those ASX funds or Australian funds are ASX mandated. you need to be on the ASX. They can even come here and buy the stock in London, but you just need that ASX cross listing for them to be able to do so. So we're excited about the prospect that that will deliver.
In terms of the detail, people are asking, is there a ceiling as to how many shares might be created? Where are those shares going to come from?
Yeah, look, we want to minimise any new issuance of stock. We have cash in the bank. We don't think we have a huge demand for a primary or new share issue. We don't want to dilute our shareholders. I'm a shareholder. I'd rather not dilution. So I think you're going to see it's either a compliance listing on the ASX, or they'll typically apply a market interest rule where you've got to show someone will buy your stock before they'll let you list there. I think in the prospectus, we'll probably limit it to less than 2.5% of stock, which is a tiny number. I think that's, say, 35 million pounds, could be less, but I don't even think we'd issue that much if all we're trying to do is demonstrate to ASX that minimum market interest. So the idea is there's effect for all intents and purposes. There isn't an equity raise. If people want to buy shares, they buy them off existing shareholders, and hopefully they come up to London and add to demand. That's the concept that we're trying to achieve here.
And very briefly, when is the prospectus due, Shaun?
It looks subject to the scheme meeting. It would come out in that last week of May. It would be effectively a public document. The process in Australia, you lodge it with the Australian Securities Investment Committee, but it's effectively a discoverable public document at that time.
Okay, and to shares consolidation, what's the logic behind the shares consolidation, and when might it happen?
Look, when I joined Greatland, we had an unholy number of shares on issue. I think 4 billion at that time. Notwithstanding, we'd only done kind of rather minor equity raises to that date. So it was a really unusual capital structure, very unusual in the Australian concept, but I think equally as unusual here in London is my understanding. Obviously, we then increased the number of shares on issue as we funded our share of Havieron, and then ultimately acquired 70% of Havieron and the 100% of Telfer. We have, I think it's 13 billion shares on issue. That is, look, it took BHP over 100 years and they haven't achieved that. So we just felt a consolidation was appropriate. There's no magic number to why it's 20 to 1 rather than 25 or 15 to 1, but it does take us down to about 750 million shares on issue. We think that's a sensible number, and the broker advice as to kind of what the stock price would be on the back of that is that that's an attractive and sensible value for it to be. So hopefully that's well received. It's really just tidying something up that certainly in the minds of a lot of investors, or sorry, institutional investors, was a bit of a question mark we'd almost always get asked.
Jane Tells and Lenny O'Hara ask, and this will be my final question, I think it's all we've got time for, unfortunately, why is a share consolidation of 20 to 1 preferable to 10 to 1 or say 30 to 1? Why 20 to 1?
Yeah, look, as I just said, look, I don't think there's a huge magic to 20 to 1 as opposed to any other number. We did take some advice just from some broking houses, what they thought would kind of resonate in the market. But also I think the concept was to probably get it under 1 billion shares on issue. It takes us to ballpark 750 million. I think that's a good number for where we are as an organisation. If I may, I'd add, Donald, I think you did a great job to get through, I think, over 100 questions and distill them into the time we had. So thank you for doing that.
Yeah, well, unfortunately, we've got a hard stop on today's question and answer session. I'm afraid that's it from the May 2025 Town Hall with Greatland Gold MD Shaun Day and myself, Donald Leggatt. Shaun has been patient as ever. We've got through as many as we could today. Apologies to all those whose questions weren't answered. And a huge thank you to all the shareholders and those thinking of becoming holders who watched. Greatland are grateful for your support. We are too. And thanks again to Shaun, who had a bit of a traumatic journey getting here, but he's here and he's doing business as ever. Thank you so much, and enjoy the rest of your day.